in terms of how you should be reading between the lines when it comes to the prices. And Dinesh Somani, founder of Pro IntelliTrade Services, joins us on the show right now. Mr. Somani, a very good afternoon, and thank you so much for taking time. Pleasure as always having you on the show, but really wanted to try and understand what's been happening with oil prices right now, because on one hand, you do have that rhetoric really continuing when you talk about Tehran and Washington, and there's no diplomacy really in sight when you talk about some of their commentary. So given all of that, prices should be, well supported at some of those levels. Is that how you're reading into it? Because the market seems to have a different opinion.
Now, more or less, what could we observe is that the number of tweets, the number of messages, the number of news, there are declines with respect to crude oil prices, and the focus has been shifting to the bond market right now. So the volatility has shrunk right now. Earlier, we used to see on Monday or a weekday, there is a gap up or a gap down opening of near to 3 to 4%. Now, which has been declined to 1.5%. We have seen the Brent crude oil pricing moving beyond $94, $95, then they are back to $91. So as of now, I think the geopolitical tensions are being discounted by the crude oil prices. Despite the Strait of Hormuz, uncertainty continues, but the prices are not that at a premium rate, nor they are below the $80 mark as far as WTI crude is concerned. So overall, if I look at the prices, the broad range which I could see for the next 1 month is $77 on the downside for WTI crude and $88 upside for the WTI crude. That's the range which I like to see.
No, absolutely, and that makes a lot of sense in terms of the kind of range that you should be keeping in mind as well. But given if there is an escalation of sorts, are you then penciling in close to $120 a barrel as we've seen before, or do you think that that's off the table really?
I don't even expect to move beyond $100.
Okay.
That's what I expect. So I think news are being discounted, geopolitical tensions are being discounted, and prices are moving in line with the demand and supply, where the supply would increase further, and we may expect prices to move below $80 very soon.
No, absolutely, and that makes a lot of sense in terms of how you should be looking at prices right now. The markets do seem in alignment with everything that you've said thus far. But, in terms of the tempering of the sentiment as well when it comes to oil prices, I just wanted to know if you think that this is because of the alternate routes that have been figured out since the previous time when prices really rose above $120 or $100 for that matter. You didn't have those routes in place, right?
Yeah, absolutely. It's more than 180 days. The geopolitical tensions have risen, and the Strait of Hormuz is almost closed and open now and then. So people would be, and the countries would be definitely looking for alternate routes. And I think if the transaction to the Strait of Hormuz will reduce, definitely they'll find some alternate route for the flow of crude oil to continue. So I think that could be one of the reasons and that is the major reason.
Right, so some amount of fatigue that you're really seeing when it comes to some of the news updates as well and the alternate routes, which is why you're seeing prices also be a slightly more range bound than we've seen earlier when it comes to even escalations and the reaction resultant. Let's also quickly take a look at gold as well, Mr. Somani, because it's holding above the 200-day moving average. What do you think about the momentum of prices going forward?
It's already at the 3 months high. We have seen a low of $39, $30. Now there is a sharp rebound. Today we have already witnessed a $4,700 mark. So a close to 15% rally in a very quick time that indicates that strong buildup in gold. The central banks, especially the Chinese bank, they are buying ETFs are moving up again. And I think the dollar index has declined from 101.5 to 99 levels. So overall things are very much in place and very much positive for gold as far as gold is concerned. So overall, I think now 45.10 should act as a very good and a crucial support. Upside, we may expect $5,100 by Diwali this year.
Wow, that's quite the forecast coming in, Mr. Somani. But also just wanted to try and understand what you think about fresh buys as well, because this is the time for festive season buying as well. What is the kind of advice that you have in store for those investors?
Definitely. I mean, earlier also when I suggested it was consolidating between the 39.50 level and the 41.20 level. The moment the 41.20 level got crossed, they got a trigger and prices move on to $4,700. So a $200 dip is quite possible from here because since prices escalated almost 15%, 2-3% dip is almost advisable. If that comes in, that would be a very good for market and very good for the investors to invest in.
All right then, so if you've missed the previous opportunity to hear out Mr. Somani, this is your time, and take a look at those levels as well. Mr. Somani, lastly, just quickly wanted to try and highlight copper as well, because you've seen quite the interesting momentum right now. The rally seems to have screeched to a little bit of a halt right now. But do you expect that momentum to also come back when it comes to copper? Because Citi sure believes that it will.
Yes, definitely. Aluminium performed earlier, then zinc moved on. Now the next one is copper in line. I mean, as far as MCX levels are concerned, 1350 is a very good and a crucial support. Prices have bounced back from these levels multiple times. They are resisting around 1400 level mark. The moment copper closes above 1400 level, we may expect 1414, 1467 very soon. So this is a trigger that is being left out to be built up. I think aluminum could be the next, copper could be the next rally in coming month.
Right, no, absolutely. And thank you so much for joining us with all of those insights when it comes to oil, gold, as well as copper. So watch out for copper as well when it comes to base metals. But with that, it's time for a very quick break. More news and updates on the other side.